What are you expecting from the markets that are currently standing at record highs? Where do we go from here?
I think for the rest of the year, I would say expect some volatility. Really disappointing jobs number. And we've also got the issues Contessa talked about, the fact that these unemployment benefits are going to go away. I think what that's going to ultimately do, because with most of those benefits, you got to think they're going right back into the economy. So I expect we'll see a little bit of a damper on spending here in the near term as those benefits go away, but continued growth in the economy just a bit slower.
Yeah, and of course, we are worried about some of these Wall Street firms ratcheting back their GDP forecasts as well. A lot of concern about COVID. I won't call it the Delta variant because it is 100% of cases, so it just is COVID basically at this point, Lee. There's a lot of concern about rising hospitalizations as well heading into the Northeast in the fall. How much do investors, while I guess all of us are amateur epidemiologists at this point, how much do we need to be watching that?
I think we've got to watch it, not quite as much as we watched it last year. When I think back to last year, honestly, at some points it seemed as though I was paying much more attention to the Delta variant, not the Delta variant, but the COVID numbers than the traditional economic numbers. We still have to pay attention to it because as a result of what's going on with particularly the Delta variant now, we've seen some hiccups in what had been a steady progression to certain segments getting better. So if we take a look at things like the cruise industry and some of the airlines, they have been marching steadily forward until the Delta variant popped at the beginning of July, and then we saw a sharp decline. I don't think we're going to go back to any sort of widespread shutdowns, but there could be some local issues. And, candidly, we've got what is the normal cold and flu season right around the corner. What's that going to mean for COVID? I suspect things will be a little choppy in that time as well.
I know a lot of people who have really bad colds right now, Lee. All of them have gotten tested. All of them have tested negative. You got RSV running around as well. The flu is back. A lot of people are sick. They run off to get tests. Thankfully, they come back negative, but you're exactly right on that point as well. From a market perspective, you got Congress. We'll talk more about that in a bit. You've got the Fed, of course. You've got all the COVID concerns that have been here now for about a year and a half. Is there anything else that we need to have on our radar? I mean, or will the money flows that keep flowing in just kind of overpower everything? That's what's been happening.
Yeah, for now, I expect that to continue. Again, a little bit of additional volatility coming out of Jackson Hole. What I got out of Jackson Hole was that the Fed's going to continue to be accommodative. The money's going to continue to flow. Candidly, this disappointing jobs number just extends the amount of time it's going to take for us to get to maximum employment. So I think for the near term, and by that I mean the next 3 to 6 months, I think the money is going to continue to flow.
A quick question to wrap it up here, Lee. Does it matter to the markets or your clients or if we taper in November or December or January? Does that matter another 30 or 60 days? Maybe it does.
Candidly, no. For my clients, we're talking about investing, and this is for retirement, mostly for the long term. So whether or not the taper begins in October or November or sometime out in 2023, for most of my clients, really doesn't matter a whole lot.